All right, now, secured entrepreneurs, Ms. Aurorah had to get on a Zoom and take a few calls, but I'm back. And I want to thank all of you, all of the new secured entrepreneurs who have come on board in the month of May. I want to thank you for jumping on the calendar and just trusting us with helping you to build your legacies. I want to thank all of you who email. Thank you. And please continue to do so at info@aurorahdayconsulting.com. Now, two of you asked about the deferred sales trust. One of you sent your documents in and asked if the trust was put together properly. Unfortunately, these documents do not spell out a deferred sales trust. So I'm going to talk to you all in this video about this entity and why you would have interest in it and, truly what it is used for. All right. So please smash that like button and subscribe to the channel if you have not. Let's get into it. For those of you who do not know who I am Miss Aurorah Dey, and this is the Secured Entrepreneur Movement. So this deferred sales trust is heavily dependent on an installment plan. I do not see an installment plan anywhere here in this gentleman's documents. Now, we are creating this installment plan using the IRS code 453. Now, the IRS has given us this code about 90 years ago, so it is legit. And it is the way that many investors go about deferring capital gains tax. Okay. So this individual does not have an installment plan here. The other thing that I didn't see in the documents was the value of the property that he is stating he is transferring to this trust in exchange for installment payments. Okay. Now, understand that what's supposed to be happening here, and I'm going to give an example based upon what this gentleman is trying to get accomplished. This trust is not specific to just real estate. It's for any capital asset. And by that, I mean an asset that when sold would result in a capital gains tax. And the goal here is to defer the tax over time. All right. So what has to happen is this gentleman was supposed to value the asset, which is his real estate. So we needed to have a value, and then the real estate would be transferred to the trustee of this trust. Now, the reason why you definitely have to have a value is because the Internal Revenue Service has already given us an equation to create the installment plan, right? So the equation has to do with understanding what the capital gains tax would have been if you sold this doggone thing today. Okay, instead of taking payments, however you're going to do this, because the plan is up to you, right? Okay, so the equation would be gross profit divided by the sale price, which is why you want to have the property valued and have this transaction happen almost immediately, because you don't want the value of the asset to go up, okay, while you're trying to get this thing together, all right? So what's happening here? This investor, okay, here's the example. So this investor has this property. He knows that if he sold the property today, he's going to pay a capital gains tax that he is not going to love, right? So instead, I'm going to transfer this real estate into this trust. Now, what happens? No money has been exchanged. So because there's no money that has been exchanged, there's technically no sale, meaning there's no capital gains tax to pay. So the investor has no capital gains tax. The trust has no capital gains tax. There was no monies exchanged. However, at some point in time, there will be payments made to this seller. There will be payments made to this seller, installment payments for the amount that was agreed upon in the transfer. Okay, now here's how it works. Either this trust already has the means, meaning the financial means. Either this trust already has the financial means to pay this individual who transferred the property over to it, or the individual who has transferred the property over to it is depending on the trust to actually sell the property. And from the sale of the property, that is how the person is planning to get their installment payments. Okay, do you understand that? So again, it's either the trust already has the financial means to do this, or the individual who is transferring this property to the trust is depending on the trust to sell the property to then start making payments. Okay, now, seeing as that is the case, this seller is named as the beneficiary, right? When the payment has to come to that individual may or may not have to pay tax. Why? Because again, you know that here in the Secured Entrepreneur Movement, we're all about growing tax-free wealth. We have a remedy for that. And just maybe the beneficiary is not an individual. Maybe it's another legal entity that when a payout is transferred to it, that payout is tax-free. Okay? All of these things are possible because the Internal Revenue Service gives us all the information that we need to make it so. Okay? So that's the other thing. The only other way around that is, hey, look, if the trust was charged with selling this real estate and income came in, if there was no payout, then the trustee of that trust would be responsible for filing a 1041 and paying tax on that income. Nobody is going to do that. So there will be a payout. Okay. Now, the question that was attached to this, but let me just back this up. So this individual named himself, and we keep seeing this, he named himself the grantor, the trustee, and the beneficiary. So that already is not valid. Okay, so that cannot happen. The other thing, I didn't see any information about the property. Okay, I didn't see the value of the property. I didn't see anything that you would be seeing in a deferred sales trust. Okay, but primarily the first thing that caught my attention was, I'm looking for the installment plan. Okay, so one, whatever the property is, whatever the asset is, whether it's artwork, whether it's a business, whether it's stocks, bonds, whatever, there's a value to something because you have to create an installment plan. Okay, now the question that was attached to this was, Miss Aurorah, how am I going to utilize this trust to make money? Okay, so like anything, based on this example, if in fact this individual is transferring the asset to the trust to sell, that is income. If in fact somebody's transferring an asset for the trust to sell, that is an income. And if that trust is having to sell these assets, well, maybe the proceeds would go to start a portfolio. So now the trust has a stock portfolio. Maybe now the trust has stocks. Maybe now the trust has crypto. Okay. And when dividends from these things come down into the trust, that is considered income. Okay. So there's your income. There's your income. Whenever the trust is making money via these assets, these income producing assets, the trust is making money. The question would be, is the trust holding on to this money to whereas it would have to file a tax return, or is the trust doing payouts? Okay, that's where you would have to go with that. But that is the deferred sales trust. Okay, that would just be you as the investor transferring that asset into the trust entity and making the trust entity responsible for paying you in installments so that you avoid legally the capital gains tax. Okay, so let us not get it twisted. And if in fact you are desiring to create this type of entity, you need to be very specific with the installment plan. Have all of your numbers together, because that is the meat of the trust agreement. Okay. So Ms. Aurorah is going to come back and answer another trust question today, and then I think that's going to be it for me. Okay. So for those of you who have not, please go down in the links and check out the Trust Basics course, because I'm telling you, without that basic knowledge, you're going to keep getting these documents, and some of you tell me where you got it from, some of you don't. All right, but we can see it's not good. Okay, it's not good. And if you have not, you need to go down and get the training for mastering tax-free wealth, so that you can understand some of the things that Ms. Aurorah was saying in this video. Okay. So you all know you can find me, Miss Aurorah Dey, at AurorahDayConsulting.com. And until next time, ta-ta.